While retail investors were panic selling Bitcoin during every single dip over the last 5 years, Michael Saylor bought $47 billion worth. Not million, billion with a B. And here's the kicker. He's bought more Bitcoin at $60,000 than most people will earn in their entire lifetime. So either he's the world's most expensive idiot, or he knows something about money that everyone panic selling at a loss doesn't. Spoiler alert, it's not the first one. This is purely educational content, not financial advice. Do your own research and make your own informed decisions. Look, when Bitcoin drops 20%, your uncle sells and posts on Facebook about how crypto is dead. Meanwhile, Saylor is on CNBC explaining why he just bought another $43 million worth. So, what's the difference? Is he just rich enough to not care? Or is there an actual strategy here that makes sense? Turns out, it's a strategy, and it's one that flips everything you think you know about investing completely upside down. Here's what most people miss. Saylor isn't buying Bitcoin because he loves the technology or believes in decentralization or wants to stick it to the Fed. I mean, he does, but that's not why he's dropping billions. He's buying Bitcoin because he's terrified of holding dollars. And when you understand why, everything else makes sense. See, MicroStrategy is sitting on a massive pile of cash from being a successful software company. And cash does something really special. It loses value every single year thanks to inflation. It's like owning ice cubes in the desert. Every day you hold them, you have less than you started with. So when people say Saylor is buying Bitcoin, what they really mean is Saylor is running away from dollars as fast as humanly possible. But here's where it gets interesting. Because he's not just escaping dollars, he's weaponizing debt. Most people think debt is bad. Your parents told you to avoid it. Dave Ramsey built an empire telling people to pay it off. And for normal people buying depreciating garbage, they're right. But Saylor is doing something different. He's borrowing money at low interest rates. We're talking 0.9%, and using it to buy Bitcoin. Wait, what? Taking on debt to buy a volatile asset? That sounds like something a degenerate gambler would do at 3 a.m. after too many drinks. Except here's the math. If you can borrow money at 0.9% and Bitcoin appreciates at 230% annually on average, you're making 229.1% on borrowed money. That's not gambling. That's arbitrage. The wealthy have been doing this with real estate forever. Saylor just figured out Bitcoin is better real estate than actual real estate. But wait until you hear about the tax loophole he's exploiting. Here's where your brain might explode. Saylor's plan is to never sell his Bitcoin. Not at $100,000. Not at $500,000. Not at $1 million. Never. But then how does he make money? I hear you asking. Great question. He doesn't need to. See, when you sell Bitcoin, you trigger capital gains taxes. Depending on your state, that could be 37% of your gains just evaporating to the government. But when you borrow against your Bitcoin as collateral, that's not a taxable event. So Saylor's strategy is buy Bitcoin with borrowed money. Let it appreciate. Borrow more money against the appreciated Bitcoin. Buy more Bitcoin. It's an infinite loop as long as Bitcoin keeps doing what it's been doing for 15 years. He's basically found a way to access the value of his Bitcoin without ever actually selling it. It's like having your cake, eating it, and still having the cake to eat again tomorrow. And honestly, if you're sitting here thinking, this sounds too good to be true, there must be a catch. You're not alone. Drop a comment with your biggest concern about this strategy because I'm curious what people think the weak point is. But there's one more piece to this puzzle that explains why he buys even more when Bitcoin crashes. When Bitcoin drops 30% in a month, retail investors have a collective meltdown. Twitter becomes a support group. Reddit becomes a therapy session. Everyone's convinced this is finally the end. Meanwhile, Saylor, he's announcing another $43 million purchase. Because to him, volatility isn't scary, it's a buying opportunity. Here's his logic. If you believe Bitcoin will eventually be worth $13 million per coin, and he clearly does, then buying at $102,000 versus $115,000 doesn't really matter in the long run. It's all just cheaper than it will be. It's like complaining about whether you bought Amazon stock at $50 or $60 when it's now worth $227. In hindsight, you were early either way, but here's what most people don't realize about his actual endgame. Plot twist. Saylor isn't using Bitcoin to make money. He's using Bitcoin to preserve money he already has. There's a massive difference. When you're trying to get rich, you take risks. You trade, you try to time the market perfectly. When you're trying to stay rich, you find the hardest asset you can and park your wealth there. For centuries, that was gold, then real estate. Now, Saylor's bet is it's Bitcoin. Because here's the thing about being a billionaire. Your biggest enemy isn't making bad investments. It's inflation quietly stealing your purchasing power while you sleep. Every year you hold dollars, you can afford less. Every year you hold Bitcoin, historically, you can afford more. And this brings us to the part that terrifies traditional investors. Saylor isn't just buying Bitcoin for MicroStrategy. He's essentially running an experiment that every other CEO in America is watching. And here's what they're seeing. A publicly traded company converting its treasury into Bitcoin, and so far it's working. The stock is up over 2,200% since adopting the Bitcoin strategy, and shareholders are happy with the massive gains despite recent volatility. If this works, if Saylor proves that companies can hold Bitcoin as a treasury asset without imploding, you're going to see a domino effect. Other companies will follow, then pension funds, then sovereign wealth funds. Saylor isn't just buying Bitcoin. He's building a blueprint that could reshape how every corporation thinks about storing value. But there's one more reason he keeps buying that most people completely overlook. Here's the thing about Bitcoin that makes Saylor's strategy make sense. There will only ever be 21 million coins. That's not a marketing slogan. That's mathematical certainty. And right now, institutions have already accumulated over 3.75 million Bitcoin. That means there are only 17.25 million Bitcoin left for 60 million millionaires in the world to fight over. When Saylor buys another $43 million in Bitcoin, he's not just buying an asset. He's removing supply from a market where supply is fixed and demand is accelerating. It's like buying up beachfront property in California. They're not making more of it, and everyone wants it. So here's what this all means for regular people watching this happen. Saylor's not buying Bitcoin because he thinks it might work out. He's buying Bitcoin because he thinks it's inevitable. In his view, and you can agree or disagree, but in his view, Bitcoin is going to become the global reserve asset that central banks, corporations, and sovereign wealth funds hold for long-term value storage. If he's right, buying at $60,000 or $100,000 or $115,000 is all early. And if he's wrong, well, he's betting billions that he's not. But here's the thing. You don't have to bet billions. The same strategy that works at the billion-dollar level works at the $1,000 level. The math on scarcity doesn't change based on your net worth, which brings us to the uncomfortable question nobody wants to ask. Let's play devil's advocate for a second. What if Bitcoin doesn't become the global reserve asset? What if it tops out at $200,000 and never goes higher? What if a prolonged regulatory crackdown or massive tech failure tanks the price? Then Saylor's strategy fails, MicroStrategy's stock craters, and he becomes a cautionary tale about hubris and over-leverage. It's possible. Unlikely in his view, but possible. But here's what's interesting. Even his critics can't point to a flaw in his logic. If you accept his premise about where Bitcoin is headed, the strategy makes sense if Bitcoin continues doing what it's done historically. The question isn't whether his strategy is sound. The question is whether his thesis about Bitcoin's future is correct. So what does this all mean for you? Here's the thing most people miss about Saylor's strategy. It's not really about Bitcoin. It's about understanding what money is, how it works, and why holding cash long-term is a guaranteed way to get poorer. Bitcoin is just the tool he's using. The real insight is recognizing that dollars are melting ice cubes and finding something better to store value. Whether Bitcoin is the right answer or not, the question he's asking is the right question. How do I store purchasing power long-term without it evaporating? Most people never even ask that question. They just work, earn dollars, save dollars, and watch their purchasing power decline year after year without understanding why life keeps getting more expensive. Look, you don't have to agree with Saylor's strategy. You don't have to think Bitcoin is going to $1 million dollars or whatever number the laser eyes crowd is tweeting this week. But if you're watching a billionaire repeatedly buy more of an asset while retail investors are panic selling it, maybe, just maybe, it's worth understanding why. If this video made you rethink how you view Bitcoin or money in general, smash that subscribe button because I break down crypto strategy without the moonboy hype every week. And drop a comment. Do you think Saylor is a genius or is he over-leveraged and heading for disaster? Because the comment section is always more entertaining than the video. The difference between people who build wealth and people who watch other people build wealth often comes down to one thing: understanding the game being played. How you understand Saylor's game? The question is, what are you going to do with that information? Your move.